Hi there. As discussed in the previous video, we're gonna talk about journal entries using the normal balances. So the entries will be based on the normal balances, meaning it is critical for you to apply these normal balances. Debit, credit, debit, credit. Okay, what do they mean? They mean each account's increasing balances, okay? Meaning when an asset item is increasing, it should be debited, okay? For example, in the previous case of SoftBite got invested by the owner 10,000. First of all, we saw that it is recorded in plain English, right? But using tabular analysis, we have written that cash on the left side increases by 10K and owner's capital increases by 10K. In journal entries, we use normal balances. I can, as an example, let's have a look at it. In this small space, I will write down that cash is increasing, right? When cash as an asset item is increasing, it should be debited. Debited meaning it should be located on the left side of your journal, okay? Which balance is 10K. And then at the same time, we should make a record of owner's capital increases. And owner's capital is increasing or normal balance, increasing balance, right? When owner's capital is increasing, it should be recorded on its normal balance, which is credit side. So we make a small indent to distinguish it from the debit side. We make a small indent and then owner's capital 10,000. Also, we make a small indent. Okay. When we are making records in a scratch paper, we can do something like this. But if you use your spreadsheet, then we can work on the recording in a way more efficient way. Okay, let's have a look at it. From now on, we will use cases that are presented in the textbook, the Weygandt et al. Textbook. Transaction number 1, 2, 3, 4, 5, 6 to 10 transactions. Okay, let's have a look at one by one. Look at them one by one. Transaction number 1, and we will prepare from now on journal entry. Okay, here date. What I did is making the cell bold faced, right? Bold faced, Control B, underscored, Control U, and italic, Control I, right? And then I will swap the two lines. What I did is cut, what's that? T, right? Or Control X, and then insert the cut cells, which is E. Again, right hand side button, the line 1. Again, right hand side button, line 1, and press E. Insert cut cells. Okay, right. date, title, debit, credit. Okay. We will enter the this, and maybe I can add one more line as reference. Maybe I can add reference here at column A. Okay. Right, and let's make a reference of A1, the first transaction, J1, the first transaction journal entry. Okay, and then you can adjust the column width as you wish. If you double click, then it automatically, Excel automatically adjusts it. Date, October 1st. I prefer having 10/1. Then how do I change the format? Again, Control 1, and then date, and yeah, this one is the one that we want. Okay. And then title. The example is the same as what we discussed 1 minute ago. So you have cash, and on the debit side, 10,000, right? I want the 1,000 separator and no decimal point. Okay. And then I want this. We are keep recording the same transaction. So we want to copy and paste, Control C and Control V. Or a better way of doing that is just press Control D. That's a shortcut key for copy and paste onto the down D. Okay, David. And then the title that I'm gonna use is, as you saw 1 minute ago, right? Owner's capital on the credit side. Owner's capital. The same amount. Right? Copy and paste. And we can distinguish the debit from credit using this indent button. All right, let's keep doing it. We are practicing journal entries. J2, the same date. The firm purchases office equipment costing 5,000 by signing a 3-month, 12%, 5,000 notes payable. Oh, well, this 12% means interest, right? But for now, let's forget it about the interest part. Let's pay attention to first the equipment costing 5,000 and notes payable, the liability, right? Let's pay attention to these two numbers rather than the 3-month maturity and 12% interest. We will revisit this issue, but for now, let's ignore this part and then pay attention to our acquisition of equipment and issue of the notes payable. What's notes payable? It's a liability item. What's equipment? It's a assets item, right? Assets item, equipment is increasing. Therefore, it should be what? It should be debited. Asset item is increasing. Therefore, it should be debited, right? What was it? Equipment. How much? 5,000. And then Control D. And then we see that notes payable is increasing. Notes payable, what is that? Notes payable, liability. On liability item is increasing. Therefore, it should be credited. Notes payable should be credited by the same amount. Okay, let's move on. Transaction number 3, journal entry number 3, the same date. The firm receives 1,200 cash advance from a client for advertising services that are expected to be completed by December 31st. What kind of business is this firm is operating? It appears that it is advertising company, right? Anyhow, it is said that you received cash from a client. For what? For your service that are expected to be performed in the near future, right? As of the moment when you received the cash, you didn't perform the service, but you are expected to perform in the near future, right? Meaning the cash you received is for your liability. What kind of liability? You will perform the service, right? Again, what's happening here? You received cash. Cash as an asset item is received, therefore increases. Therefore, it should be debited. But at the same time, your cash received is because you have something that you owe to your client. Your service in the near future is the one that you owe to your customer. Okay. Again, your liability, the amount, the dollar value of your service in the near future, the liability is increasing. Therefore, it should be credited. And that kind of liability is called unearned revenue. Okay. What does that mean? You received cash, but you didn't earn it yet. Right? Does that make sense? I think so, right? You didn't earn it yet because you didn't perform yet. But as time goes by, you are entitled to recognize your service performed as part of your revenue, right? So how much is it? 1,200. And then J4, J4, 10, third, 3. The firm pays office rent for October in cash, 900. What's happening here? Cash is being paid, right? Cash as an asset, right, is decreasing. Cash asset item is decreasing. Therefore, it should be credited. So cash decrease should be credited. Right? How much? 900. For what? Because you pay out rent. Rent expense? Where is it? Expense. When expense is increasing, expense is increasing, it should be debited, right? Rent expense increase should be debited. So that's the reason why we debited. Did you see something awkward? I did. What is that? You have always debit first, right? Debit, the practice is all debit side items come first, and then credit sides later. Okay? One transaction may have several different lines. We are studying for the first time the journal entries, so most of the records are being completed in 2 lines. But when you have multiple lines, which is surely possible, you should have everything, all the debits first, and then credit later. Okay. What are we studying? We are not studying something like law of physics. No, we are studying what ordinary people like you and me, business people, have developed over hundreds of years. Okay. And then J5, the date. The firm pays 600 for a 1-year insurance policy that will expire next year on September 30th. What is said is you pay out cash. So cash is decreasing. Again, cash as an asset item decrease should be credited. So cash decrease should be credited for 600. Because of what? You paid insurance policy, right? But as of the moment, as of the second, when you pay out cash for insurance policy, did you enjoy the insurance coverage benefit? At the second, at the 10 a.m. of October 1st, when you pay out the cash, did you have a chance at the second? Did you have a chance to enjoy the benefit of 1-year insurance service? Nope, right? You pay out cash because you are entitled to enjoy the insurance policy over the next 1 year. That kind of your right that you will enjoy soon is called prepaid expense or prepaid asset. Specifically, in this case, prepaid insurance. Okay. What is this? This is one of the asset items. Your right to be covered by the insurance in the near future. Your asset item, prepaid insurance. Your asset item, prepaid insurance, is increasing. Therefore, it should be, again, asset. Prepaid insurance is an asset item. Is increasing, so it should be debited. Okay. That's what we did here. Next, transaction number 6. On the 5th, the firm purchases an estimated 3-month supply of advertising materials on account. On account is the typical phrase these textbook authors use to describe non-cash transactions. What did you get? You purchased advertising materials. And did you pay cash? Nope. What does that mean? You owe to the supplier, right? A typical account that is used for this kind of liability is accounts payable. Again, accounts payable, a liability item is increasing, so it should be credited, right? Accounts payable should be credited. How much? 2,500. Where is it? 2,500. Because you've obtained the asset, supplies. Okay? Supplies asset is increasing. When asset is increasing, you should record it on the debit side. And then we don't have 7. Okay, cool. J8, 1020. The owner of the firm withdraws cash for personal use. Then cash is increasing or decreasing. We are not concerned about private banking. We are concerned about company's records. So cash is, from company's viewpoint, decreasing. Cash as an asset item decreases. Therefore, asset item decreases should be credited. Yes. Cash. How much? 500. For what? Because the owner withdraws cash. Or owner's drawing is increasing. Owner's drawing increase should be debited. Okay. So we debit owner's drawing. Okay. Finally, transaction number 9, J9, and 26. The firm owes employees salaries of 4,000 and pays them in cash. Okay, salaries paid out. So you have salaries expense, right? Salaries expense, where expense on expense item is increasing. Your expense is increasing. Therefore, it should be debited, right? How much was it? 4,000. Okay. And we have the same records. And then we pay them cash, meaning cash on asset item is decreasing. Asset item decrease should be credited. Okay. Cash credited. Okay. And then finally, the last transaction, on 31st, the last day, the firm receives cash 10,000. Cool. For advertising service performed in October. Service performed is, as discussed, the typical phrase, one of the typical phrases that describe sales revenue or revenue. Okay. In this class, we use sales and revenue interchangeably. Okay, so you can say that revenue increases or sales increases. Where should it be? Sales or revenue increase should be credited. Sales. Because we received cash, asset, cash increase should be debited. How much is the balance? 10,000 and 10,000. Okay. All right. That's it for journal entries. And in the next video, we will study trial balance and well, general ledger first and then trial balance. Okay, and see you there.